In 2017, Verde invested just $10,000 into crypto. Today, that account is worth about $650,000.
Best investment we've ever made.
The real question is, are gains like this still possible?
Do I believe that there's still potential? Unequivocally.
But how did it all begin? How did this advisory firm end up buying crypto in the first place?
So Eric, welcome back. We had you on for our first episode of crypto. What I wanted to spend some time with you on today was specifically talking about how you got into Bitcoin or Ethereum, how the company started doing this. Not a lot of financial advisors are really paying much attention even now to cryptocurrency. So give me that story. How did you get started on this path?
Yeah. So at a high level, a client came to us and basically said, I have something. I've shifted everything else to you with research. Can you research this? And that's when they brought to us Ethereum. I basically had to make sure that I clarified how I should spell it. I had no clue of what this was. And then we started to actually go through the research. We dove in. I was tasked with it. At night, I dove in. I started to have more coffee throughout the middle of the night and realized that, holy crap, like there's something here. This is something that could be revolutionary. And why is no one else really talking about it? And then we started to go down further path.
So what about Ethereum at the time? Because what year was this? This was
2016 going into 2017.
Okay. So this was almost 10 years ago. And at the time, Ethereum was what, $100, $200?
I think the first purchase was under $50.
And what was it about Ethereum that made you think like, oh, there might be something here? Because, people come to us and I hope you all understand with all kinds of wild ideas. What about this idea made you think like, okay, there might be something here?
This would take on a new iteration of the internet and built in a better way.
Okay. What about the internet was built the wrong way? Like what part of it do you feel like it was wrong?
It was built initially as a public good,
okay,
to be used for the better purpose for all, right? And maybe more efficiencies and access. And then it created this world where some of the biggest tech empires are really using our data in a way against us.
So once you did the research and you found kind of this new version of the internet, what did you do next?
I basically went through the process of looking at how do I learn more about crypto? And it's basically meeting crypto natives, people who are in the trenches on crypto where they're at. So it's looking at things like Twitter or X. It was looking at things like Discord. It was looking at things like Telegram.
Because you didn't tell your client like, hey, let's put $10,000 into crypto, did you? Like you didn't buy it for them right away.
No, not at all. No, it was, we had to see if this could be something that's actually a good investment, if it's viable, if there could be the opportunity for bigger growth. But it was also like, I had to learn more about what is actually happening in the space to see if it was something that's even worth the attention.
So when was the first time you or Verde invested in Bitcoin or Ethereum?
Early 2017. Okay, because when we started to, as a group, start to actually put in monies, that was a painful process.
Yeah.
It was nuanced because there was Coinbase, but sort of a lesser known name at that time that was uncomfortable.
Right.
And I remember the first time I put money in, it was like $20 and like anxious of not knowing what was going to happen, how it would play out, and then starting to accelerate it as I felt more comfortable. $100, $200, $500.
So how long did it take you? Because we have a long history of doing this at Verde. We won't experiment on client accounts, but we will use our own money. So you got the approval, I'm assuming somewhere around 2017. And we decided as a firm to invest, what, $10,000 was it at the time?
Correct.
Okay, so we invested $10,000. I think it was 5,000 Bitcoin, 5,000 Ethereum. And like you said, it took us a month to just buy $5,000 worth of Bitcoin because of some of the restrictions and the money movement issues.
Small amounts.
Yeah.
Throughout that progression.
Okay, so you buy 5,000 of Bitcoin, 5,000 of Ethereum. What happened next?
We watched painful explosion of crypto finding its legs, seeing the ups and the downs as the whole space evolved.
Okay.
So we left it there. And some of that was painful because it went up, and then as quickly as it was going up, it went down.
So when that happened, what did you learn from that? And what did the investment committee take away from that process? Did we look at it and say, okay, this is a boom and bust, done? Or I guess what was the next step?
From what I recall, it was the investment committee still having skepticism to a degree on, okay, what is this? Is this like going into a penny stock or is it something else? I think in hindsight, it was very much an industry that was trying to develop and evolve and needed to have certain rails around it to evolve. And we were seeing that happen live, just like if it was 100, 200 years ago, looking at the stock or bond market and seeing that start in its infancy. For us, what I learned professionally, but even personally, is that it's okay to be patient on certain things, but it's also important to acknowledge when you should maybe take profits and then rebalance
Okay, so I want to hone in on that because
Yeah.
everybody talks about, well, if I had just gotten in 2015, 2016, I'd have all this money. We did get in and we did see that boom and bust. And initially we did nothing about it. But like you said, one of the learnings that we had was that every market goes through these boom and bust cycles. And actually, without trying to market time it, what became kind of the trading philosophy, knowing that in that market there were probably tons of gamblers at the time, people that were moving in and out. What are we doing now? What have you learned from that time frame?
I'd say we learned that if you have a range of different assets, irrespective of if it's crypto or digital assets or something else, you have to be cognizant of having rails around it and being able to say, if something goes up by X%, being disciplined enough to actually say, I'm going to take some of those profits and redistribute it to the things that are actually not doing well, buying the things that are cheaper.
So what are those rails? Where did you set your buy and sell targets? You got $5,000. You're saying when it gets to $10,000, what do? You sell all of it? Or how much do you sell?
Every client is different, but at a very high level based off of our systems, $5,000 goes to $10,000. You are taking, in essence, $5,000 off of that, your profit, redistributing it somewhere else. You're not getting rid of all of it. You're keeping your main baseline of what you had. But by doing that methodically over time, especially with a volatile asset, that allowed our returns to accelerate much better than anyone would have ever had just by holding it.
Almost like a casino. You're at the table, you're up a lot on chips. You're not going to sit there and just keep playing. You're going to take some off the top. I think again, a lot of people do not think about that. They think in all or nothings. But in this case, I think about, had we done that from the beginning, right?
Yeah.
When Bitcoin was going up and it was going up 10x, we could have sold along that way, captured a lot of those profits instead of watching that whole wave up and down. Now, here's another question. Okay. A lot of people have questions about the idea of, well, as we started with $10,000, that was a relatively minor sum to us, right? Like we obviously didn't put in $1 million or $2 million or $5 million. We certainly didn't start investing for clients. When somebody's trying to do this, what is the right percentage for them to be able to put in? And now, obviously, the industry's evolved a little bit. What would you recommend at this point? What do we recommend as a firm to clients?
It depends on the risk, depends on comfort. But if we're looking at a range, it could be anywhere from 1% allocated amongst maybe some top tier tokens like Ethereum and a Bitcoin proportionally, all the way up to maybe 5%. For some clients, it could accelerate even higher. And then for even crypto native clients, it could be winding down sizable amounts of their net worth that are within crypto to a more palatable fraction.
So I'm curious, that account that started with $10,000, does that account still exist today?
It does.
It does.
Okay.
Our viewers are going to want to know what happened to that account. So where's that account at now?
That starting at that moment has shifted into about $650,000 approximately.
$10,000 to $650,000, enormous gains. Is that the best investment that we've ever made at Verde in terms of, single category, or is that in the top 10? What would you think?
Yeah, hands down.
Hands
the
down.
best investment we've ever made.
This is why we need to talk about Bitcoin. This is why we need to talk about Ethereum. Are there gains like that still to be had in this market? Or do you think it's largely over and the gains in the future are going to be smaller?
I think the magnitude of what we saw over the last 5-10 years will not be maybe as rapid just because of where it was coming from in its infancy. But do I believe that there's still potential? Unequivocally.
Do you think there will be a day when a Bitcoin is $1 million?
I don't think it's unfathomable. And I would argue, even though that sounds crazy to say, and everyone who's listening to this, that probably sounds crazy. I think the reality is no one would have anticipated even what we've seen thus far, right?
Right.
And now you're seeing a world where we have more institutional adoption. We have rules and regulations that are coming out that are not only more swift, but also more controlled, more thoughtful, and also more receptive to having a digital asset in crypto projects designed within the US market. We recently even got announcements about liquid stake solutions tied to even Ethereum, where for many years it was so nuanced of what that would even be termed like. SEC is being clear with how it's defining it. We just recently also had President Trump announce that we can see 401ks allow.
That was literally yesterday. Trillions of dollars of 401k and retirement assets now that were prevented earlier from being able to buy digital assets that now can buy it. So a couple of recap items. Number one, look at this space, right? Start thinking about investing in this space. In the first video, we talked about it's as simple as buying an ETF. You can go buy a Bitcoin and Ethereum ETF right now, very, very low cost in any brokerage account. Number two, consider an allocation, like Eric said, 1 to 5%. That's a good spot to start. Number three, if you don't want to trade it yourself, call us. We have a methodology of putting rails around this thing to where we can protect you, but you definitely got to be in an asset that goes from $10,000 to $650,000. That is the potential here. That is the magnitude of what we're talking about. So thank you again. We're going to go a little bit deeper in the next video. Stay tuned for that.